While they weren't big gains, we did have a record-setting day on Wall Street. The S&P 500 closed up by 0.42%, near its high of the session, and did establish yet another all-time high. We also saw the other indices closing up by various amounts and continuing their strongly bullish postures that I discussed on Tuesday's video. So we'll take a look at all of that. We'll then get into our trade application example, where I wanted to focus on more of a neutral strategy with a financial exchange stock that seems to be kind of tracking sideways with an iron condor. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's April 8th, 2021. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down to our description area and sign up for our email distribution list. So that way you can be alerted whenever we post these videos. We also give you a heads up if any stocks in the S&P 500 are giving you overbought or oversold cluster signals at the bottom of those emails. In addition to that, we're heavy users of Twitter. My handle is @BrandonVanZ, and we really appreciate those of you that click like and retweet on these Market Outlook related tweets. If you want to follow our corporate handle, it is simply @MarketScholars. And last but not least, we have a presence on Facebook. Feel free to join our group at that web address you see in the logo in front of you. All right, let's go ahead and jump into our activity here today. And also a quick little reminder, David is on vacation, and so as I mentioned on Tuesday, he will not be doing his videos this week, so that means tomorrow there will be no video. Today will be the last one of the weekend from us, and then next week I believe he gets back on Tuesday night, so I think that means that on Monday there would not be a video either. I'll be doing the video on Tuesday, so just want to make sure you guys are aware of that, so that way you don't think that our emails are getting lost or anything like that. It's just that the videos aren't getting done since David's getting some well-deserved R&R, as I was chatting about there on Twitter earlier today. So anyway, let's go ahead and get into today's activity and see what we can learn. You can see here that we had the S&P 500 up 0.42% today, and you can see we had the nice green label showing up above the chart telling us that today was a yearly high, and in fact that's of course an all-time high as well. You'll notice here the S&P 500 closed at 40.97 and its high was 40.98. We had a nice little surge right at the end of the session today to kick us right up there towards the high. So kind of gave you the impression that if the markets were open another half an hour or so, we might have very well even had further progress. Hopefully that bodes well for trading going into tomorrow's session. The Dow Jones Industrial Average was up 0.17% today, so it was our laggard here today. And remember, that tends to make sense. The Dow Jones had done better about a month or so ago compared to the other indices when there was more concern about stocks. Now that markets are rallying strongly. In fact, today technology was our leading sector. We'll talk about that later. But typically when we have more of a risk-on mindset, you usually see that the boring kind of stable blue chip type of status of the stocks that are in the Dow Jones Industrial Average take a little bit of a back seat. So it was good to see them get a little progress there at up 0.17%, but was the underperformer of these four that we see here today. Nonetheless, we retain our strongly bullish posture, and you can see here that our candle is awfully close to hitting a new record high. In fact, there's a very decent chance that the Dow Jones would end up following the S&P 500's lead and giving us a new all-time high, perhaps as soon as tomorrow. On the NASDAQ down below, that was our leader here today. I mentioned just a moment ago that technology stocks were our best sector, and typically when that happens, you usually give the edge from a broader index perspective to the NASDAQ composite, which does contain a healthier portion of those technology stocks than what we tend to see in the other indices. Well, anyway, the NASDAQ composite up 1.03% today. And you can see that we continue to have this strongly bullish posture. Remember, when the background color of the chart is dark green, that's a strongly bullish posture. When it's light green, it's a weakly bullish posture. So we already had a bullish posture back here on the final day of March, and we've just continued to sail ever since then. That's been really impressive to me in particular. I had my hesitations as to whether the NASDAQ could make the move as quickly as it did, but you can see here it's been pretty aggressive. Each day has mostly made progress. We had a little bit of a pullback there yesterday. But for the most part, that's been a really strong move there for those technology and growth-oriented stocks. We talked about that briefly yesterday in my factor-based swing trading class, where we think about things like momentum stocks versus value stocks. And in prior weeks, momentum was dead last on our factor selector. But this week, there was enough positive energy from those momentum stocks where they actually got up off of the bottom slot into the second to bottom slot. So there was a little bit of anticipation of this move already, and we'll see if it can take us a little bit further. But I think it is a strong sign to see the NASDAQ easily holding these levels above kind of the 13,600 range, 13,600. We had a fairly reasonable level of resistance that we had to get through at this level, right there, and then once again right there. So we had kind of a 3 touch points there that could have acted as a resistance area, but NASDAQ had other things in mind over the past week. It surged straight through there, and the longer you kind of establish your presence above that breakout zone, the stronger that breakout is considered in hindsight. In other words, it can be built upon, and we can see more bullishness going forward. Now, as I was mentioning on Twitter the other day, keep in mind that April is actually the strongest month for the stock market, at least the S&P 500, if you were to look back all the way since 1950. Since the 70s, when the NASDAQ was developed, the NASDAQ has actually seen April be its second best month. So in other words, this tends to be a stronger time seasonally for stocks before we get to May, where oftentimes we do have a little bit of a spillover in May depending upon the year. But right now, I think that helps support the case for bullishness in the markets. Not only do we have a supportive and accommodative Fed, in fact, it was interesting seeing some of the interviews on CNBC today with Jeremy Siegel, who's got some excellent books. I would highly recommend Stocks for the Long Run for those of you that are long-term investors. But anyway, Professor Siegel said that the current Chairman Powell was the most dovish Fed chair that he's ever seen. And that's saying something. Siegel's been around for a very long time. So that is, of course, helping the entire system. It's allowing money to be printed, liquidity to be accessed. And, right now with ultra low interest rates, when you've got a couple of extra bucks in your pocket, you're probably a little bit more prone to entering the stock market than the bond market. So anyway, the seasonality in April tends to help our current bullish posture that we are seeing here across the board with these 4 indices. The Russell 2000 was up 0.88% today. However, as you look at the chart here, this is the one that's probably the more concerning chart now. A few weeks ago, I would have said it was NASDAQ. Now that the NASDAQ has showed its bullishness here, I'm less concerned about the NASDAQ. I'm a little bit more concerned about the Russell 2000 now. You'll notice that we're just kind of stuck here on its moving average, and the moving average itself is falling. So we closed slightly above the moving average today, but because the moving average is falling, that moving average is painted yellow. So we have kind of opposing thoughts there, as it were. The path of least resistance, according to the moving average, might very well be down. On the other hand, since the Russell 2000 is up nicely off of its lows from a couple of weeks ago, we actually do have a strongly bullish posture according to the market forecast intermediate line, which is our default setting. So this green line down below here you can see is rising, and because that line is above 50th percentile in rising, currently at 59, we would consider that to be strongly bullish. It's just that from the eye test perspective, and you look at all 4 of these charts here, I do think that the Russell 2000 is the one that leaves quite a bit to be desired there. It's just kind of languishing in comparison to those other indices. So small caps may not be the best place to be hanging out right now. All right, let's go ahead and take a peek here now at our 3 green arrows setup. This will be chart 4D. And so as we're looking at this chart, you can see that we've got a clean sweep from this perspective as well. Not only do we have all 4 of our charts with strongly bullish intermediate market forecast postures, but on this particular chart setup, we have all 4 of these charts with 3 green arrow statuses currently as well. Remember on chart 4D here, these background colors in green signify the 3 green arrows zone, I guess you would say. The only one that had a change here today was the Russell 2000, and the reason for that is it closed back up above that moving average again. So anyway, the other ones had been in the 3 green arrow zone, and we discussed that on Tuesday, so I won't belabor that point, but just keep in mind that the trend trading might be coming back into favor a little bit more now that we have those types of conditions. Let's go ahead and take a look now at our longer term chart. This is our 1040 crossover method. And as it stands right now, we're in pretty good shape from a longer term perspective. These charts are 3 years in length, with each one of the candles being 1 week in length. And as we're looking at these charts, we are seeing bullish crossovers across the board. Now keep in mind, this is the less sensitive approach of the markets where you don't see a whole lot of signal changes that take place. So it's just kind of informing you what we have already known for the last several months, which is we continue to have bullish buying pressure underneath and supporting this market. The bears have come out on occasion. We saw that here a few weeks ago in the NASDAQ. We saw it earlier in the year at the NASDAQ. We saw it last fall during different periods, right over here as an example in kind of that September time period on the NASDAQ. So there have been a few touch and go points along the way, but none of it has been violent sell-off, violent bearishness. We've only had just a little pinch here and there of bearishness mixed amongst a very bullish larger scenario. And so that continues to be the case. However, I will point out the same thing I mentioned on Tuesday, which is of these charts, that when we're looking at them all side by side right now, the 2 that look the best are the 2 on the top. That is the S&P 500 and the Dow Jones Industrial Average. If you look at the PPO lines down below, these are these kind of green lines that show up. We are seeing an expansion of those lines away from one another. And when the orange line, in this case the 10-week moving average, expands up and further above the blue line, which is the 40-week moving average, at an ever-increasing pace, it basically means that the buying in the shorter term has been more impressive than the buying further back in time. That is generally perceived as a bullish situation. And so the Dow actually looks the best from that kind of expansion perspective right now, but the S&P 500 is holding its own weight there as well. The other 2 down below, a little bit more concerning there. You can see that those green lines are kind of drifting or rolling over there, telling us that the orange and the blue lines are kind of pinching together a little bit more. Hopefully what we saw out of the NASDAQ this week will give it an opportunity to start turning that line around here, but it does take time since we are dealing with weekly candles here, so it might require a few weeks before that could occur. Nonetheless, it is good to see that the NASDAQ is not just going to roll over. It looks like it does have some nice bullish pressure upon it here at this moment in time. Let's go ahead and pop on over here to the internet briefly. I always like to get an opportunity to say thank you to those of you that help support this project. We don't make any money off of these videos. We do them purely for educational and promotional perspective. So don't make you listen to any advertising, and we don't monetize them in any other way. All we simply ask out of you is to click like for us there on Twitter to help get the word out a little bit more about our business. And if you have friends or family that are interested in education for trading and investing, we'd encourage you to introduce them to us, as we'd love to be able to work with them going forward with our premium products. Anyway, as long as we're getting at least 100 people liking the video on Twitter, I think it is worthwhile to produce these videos. And so you guys have done a remarkable job for me over time, constantly getting that up and over 100. 106 of you were able to do that last time around. If you want me to do these videos again next week, just go ahead and click like, and as long as we're up and over 100, I won't even second guess it. All right. Also, while we're over here, on the popular recent posts over on the right-hand side of this area, I did put a new post together yesterday for the March dividend growth investing increases. This is something that is available for free, right? A lot of our areas of our website are kind of locked down to our premium members, but there's a few areas that are opened up for everybody from a free perspective, and the dividend growth investing blog is one of them. And so if you were interested in seeing those stocks that were raising their dividends last month, feel free to click on this link here. So for instance, if I right click on it and go to open in new tab up here, you can see what that web address looks like up at the top. You can also also find it under our blog category. If you hover your mouse over blog and then click on dividend growth investing, you can find it there. But here are a number of those stocks that have been raising their dividends recently. Some of them more popular than others. Some of the more recognizable stocks there, in this case a REIT, American Tower, the largest REIT out there, cell phone tower REIT. And then we've got Colgate-Palmolive, which has raised its dividends, as you can see here, for 58 years in a row or more. That is a dividend king at that point. Anytime you're up in over 50 years straight of dividend increases, you are anointed as a dividend king. So Colgate has been proven a worthy investment over time. Dollar General, of course, a pretty popular company. Dick's Sporting Goods, we talked about that in one of my classes here more recently. We've got General Dynamics. That is a dividend aristocrat company with 30 years in a row of increases. Remember, if you're in the S&P 500 and you've got at least 25 years in a row of dividend increases, you are typically anointed as a dividend aristocrat. And General Dynamics, the defense contracting company, is most certainly one of those, and a stock that we've purchased multiple times in my classes throughout the years, and it's done reasonably well there for us. Let's see what else we can learn here. There's Innovative Industrial Properties. For those of you that are looking for pot stocks or marijuana stocks, you probably don't normally think about REITs as being able to accomplish that, but this is a kind of a unique REIT. IIPR is the ticker symbol. It does offer a pretty decent little dividend as a REIT, but it does focus on the cannabis space there. They don't have very many years in a row of increases, however, only 5. So that one's a little bit unproven. Nonetheless, for those of you maybe a little bit more speculative, could be an interesting one to check out there. There's Realty Income, the monthly dividend-paying company. They raised their dividends once again. Oracle was on the list, and Oracle had a massive dividend increase of 33%. You don't see those types of dividend increases from huge companies all that often, so that was rather impressive. Let's see if there's any others. There's good old WD-40 on the list there as well, and then Williams-Sonoma. We took a look at Williams-Sonoma in class here a couple months back, and it's been astonishing to see their success as a traditional brick-and-mortar retailer, but their earnings are firing all cylinders right now. They've really transitioned their business model during the coronavirus pandemic and have shifted a lot of their sales online and have been one of the remarkable success stories and able to do that. So anyway, feel free to check those out on your own time if you're interested in the topic of dividend increases. Also, I taught my question and answer session class earlier today. As always, we had some excellent conversations. For those of you that are premium members, I'd welcome you to watch the recording if you're interested in these topics. I got asked about Funko, which is a pretty interesting little pop culture company that's kind of getting into NFTs here recently. It's actually ranked number 2 on our stock selector tool out of 1,000 stocks. So we talked about that stock. We talked about Chicago Merck. Very interesting company there. In fact, so unique that one of the things I discussed in the class today was that I don't recall another situation like Chicago Merck, and that is a little bit of a tease for those of you that are wondering what it is that I'm referring to there. Feel free to check out the recording if you're a premium member. But Chicago Merck is doing something that I don't think I've ever seen any other dividend stock ever do. Also had a question about the Excel program that I use for my drip tracker spreadsheet that I offer up to our premium members. I had a conversation about the real-time data connecting technology between an Excel spreadsheet and the Thinkorswim platform, and then talked about how that technology may not work all that well on a Mac computer, and Google Sheets it doesn't really work with that either. So it's really a Microsoft Excel product. Also, I've got a question about VIV, which is Telefonica Brazil, as a rare entity from a foreign perspective to talk about from a dividend-paying capacity. And then also had a question on Vici, which is also a very interesting company that recently transitioned their business in a big way by taking over a lot of real estate on the Las Vegas Strip ever since Caesars kind of consolidated, and then we saw Las Vegas Sands kind of sell off some of their properties in Vegas as well. So if you're interested in those topics, be sure to check out that recording there. Now, Keep in mind, because David is still on vacation and will be until Tuesday of next week, that means that our next class now, from a premium perspective, will be my top-down trend trading class on April 12th. So that would be Monday at 11 a.m. Eastern time. I'll look forward to seeing many of you there at that time. Let's get back on track now with some more Thinkorswim charts. Let's do some 12 grid analysis. And so I'm going to come over here to chart 5A. And as we're looking at this, a reminder that these 12 grid charts, since they're all miniature charts, we only apply one color background to them, and that color represents what is the current intermediate posture according to the market forecast technical indicator. So as you can see here in this example, most of these charts on 5A do have a green background color telling us that the posture is bullish. There are a couple of exceptions to that, and they're both on the bottom rung. In the lower left-hand corner, we have the US dollar. It was down again, and remember, we talked about this on Tuesday. This was the chart that I said, boy, if you would have sold that entity off when it gave you an overbought cluster signal, you're pretty happy for that decision at this point. Remember, on Tuesday, I'd said it had gone down 4 days in a row. Yesterday, it rose just slightly, but today, we then cut through yesterday's low and continued down. Now, where we're standing right now on the US dollar is actually a quite important level. This is the level where I'm going to wonder if the buyers are going to be waiting in the wings. A lot of times we do see some kind of support right around those 30-day moving averages. Back here, we were able to recognize that in late January. We did it again here in early February. And then while at the end of February, we did cut through it a little bit more violently, we were able to kind of resolve that to the upside fairly quickly in that case. So this is the first time we've been back to the 30-day moving average on the US dollar since going back here to basically March 2nd. And so I'll be very curious if in the coming days we get a little bit of buying pressure in the US dollar. Now keep in mind, when the dollar is weak, oftentimes we do get a little bit of benefit in terms of foreign securities and also commodities. So with this weak dollar, you can see up here at the top that foreign developed stocks did outpace U.S. stocks today. Foreign developed stocks were up 0.57% versus the 0.47% for the U.S. stocks. And then EEM can make the same claim. EEM was up 0.82% today. So it did kind of lead all three of those categories there. In terms of commodities, you will see that gold had a very impressive day. In fact, I nearly placed our trade application example on gold, but it was just kind of hard to find the appropriate setup there. I was hoping to find a bull put spread where I could sell the put strike down here at that double bottom, but it just wasn't able to get that to work. And then when I looked at a lot of the gold mining stocks, a lot of them have their earnings coming up here shortly. So anyway, it is an impressive move there with gold. Let me go ahead and right click and maximize that sell. We've been talking about this possibility here for a while, and now it's actually happening before us. And so it's making me much more comfortable with the idea of looking at gold as a possible turnaround play here. Remember, one of the things that tends to happen when money gets pushed into the system in a big way is inflation starts creeping higher. And there can be in market environments where gold benefits with rising inflation expectations. And so this is kind of, it has the potential based on the macro conditions that exist right now. We were just kind of waiting for the technicals to help support that conversation. And right now we are starting to see the technicals helping to support it. Over here was an important candle on the 17th of March. And what I'd like to see is for us to cross above the high there and stay above there for a few days. Well, today we were able to make that claim. Today we did cut above that high of the 17th on gold, and not only did we cut above it, but we stayed above it, which is just as important. We didn't close at the high of the session there for gold. Nonetheless, we did close at about the midpoint of the candle, and that midpoint was above that prior high. So if we can get a few more days in a row at around this range, I think you got a pretty decent opportunity to see that moving average start to turn around. Recognize right now that gold's moving average continues to travel to the downside because it's a 30-day moving average, and naturally all moving averages are lagging to some degree. This one is, to capture 30 days worth of information and constantly replace the 30th day with the most recent day and so on and so forth. So if your most recent days are starting to become more bullish and your days back on 29 and 30 are more bearish, then those constantly get replaced, and eventually that actually starts turning the moving average itself around. So this is a really strong sign here, because this is the first time since basically the entire chart here of 3 months where gold has been staying above this moving average. You'll notice that back here on this candle exactly 3 months ago, it was above the moving average, but it closed below it. So with these candles here in the last few days, these are really the only ones on the board where you could make the claim it's above the moving average, and it appears like it's being more stubborn than it had been in the past. We had so many of these reversion to the mean moves here, right? We had a sell-off low right there. We had a reversion to the mean. We rolled over. Sell-off low with those oversold cluster signals. Reversion to the mean. Sell-off again. Oversold cluster signals. Oversold cluster signals. Reversion to the mean. Looks like it's going to roll over. Looks like it's going to cross that prior low, but did not happen. This next day was a really impressive one, and we've just been going up since then. So now you're looking at this chart, and it's starting to suggest that this might have been some sort of a double bottom right here. A lot of times you don't go just straight up after that type of a pattern, but at least it's worthy of consideration if there's a little bit of back and fill along the way and you're trying to kind of establish a larger position. Right now, I think that this is a chart that has my attention from the bullish side of the equation, and I'd be looking for opportunities there. You can see that green line is just about to cross up and through the 50th percentile here as well. It's at 45 and rising. Remember, once it gets above 50th percentile, that background color will turn dark green as opposed to light green and kind of kick it into gear with a lot of these other charts that we have. Oil was actually down just a little bit here today, not much. It was kind of a break-even type of a day. It was down 0.1%. But I think the gold chart is more impressive than what we see out of oil. And that might sound confusing to some folks because they see that oil is up 15% over the last 3 months, gold is down 5% over the last 3 months, but just the activity that we've seen here recently can suggest that there might be a transition that's taking place here. Notice that the moving average on oil continues to be red. We talked about that on Tuesday as well. Remember, I did the bearish trade on Marathon Petroleum that day, and that was part of the thesis behind it was, hey, oil is starting to struggle here at these levels, and the moving average is actually rolling over here to a degree. So of these two charts, despite the strength in oil from a longer term perspective here in 3 months, what I've seen over the last couple of weeks suggests that I think I'd rather be long gold at this point than what I see out of oil. And of course that can change, but that's why we look at the charts as often as we do. But right now, you're just seeing more resilience there in gold. And if I'm not mistaken, I think silver had a pretty decent day as well. Let me just type in SLV here. Yeah, silver was up. It was up 1.24% here today. However, I like the looks of the gold chart a lot more than silver. You can see here with this move with silver, we did not have the double bottom concept the way that we had with gold, and the reversion to the mean move in silver has now just put it directly below its falling moving average. So it could very well just start bouncing back lower from there. So of the two, if you're looking to be bullish, I think gold looks like it's the more impressive chart in my eyes. We did have a pullback in interest rates today. We ended at 1.63% on the 10-year, and that means that bonds did rise. The TLT, which is the long bond here in the United States ETF, that was up about 0.83%. Foreign bonds are starting to look a little bit more impressive. They were up today as well, but it wasn't the move higher that was impressive today as much as what's happening on the chart. Notice the background color of the foreign bond chart is actually dark green now, and we do have a green moving average on foreign bonds for the first time in 3 months as of today. So that is new information right there. And you can see that foreign bonds have really been tracking sideways here for the last about a month and a week or thereabouts, basically the end of February. It's tracked sideways. And so it has been more stubborn longer than what we've seen here with U.S. bonds, which have been tracking sideways since mid-March there. So that's why this one's kind of leading the way there if you're looking for bullish bond exposure, it might make sense to focus on the foreign bonds as opposed to U.S. bonds at this exact moment in time. Bitcoin was up about 2% today, but let's keep in mind that's such a volatile asset class that 2% is kind of an afterthought there. But it does remain above that rising moving average and continues to have that strongly bullish trend. Let's go on over here and take a look at our sectors now. This is chart 5C. And as I mentioned earlier, technology was today's leader. It was up 1.44%. And not only that, but just the placement of the candles is impressive as well. Notice that with today's surge, which was a gap higher and a continuation of that move throughout today, it actually got up and over that prior resistance area. So that is not something I would have expected. This has been a straight line higher here in the last week and a half for technology stocks. So that's been rather impressive. Now keep in mind this is the market cap weighted version of that. So you're going to have kind of your FANG types of stocks, or your other big tech stocks, I should say, that are kind of leading the way there a bit more. So that was our leader here today. And remember, that's a good sign. When technology is leading, it gives you a sense that risk appetite is healthy. On the downside here today was energy once again. Energy was down 1.3%. You can see it's the only chart on the board that is pink, telling us that we have a strongly bearish posture right now with the intermediate line at 37 and falling. Not only that, but we have new information to share with you here today with XLE. As of today, we now have a red moving average. In other words, price is below a falling moving average. Prior to today, price was below a rising moving average. So the sell-off in energy shares have been significant enough to actually start pulling that moving average down a bit, which is a bit more of a bearish sign there. All right, let's get into our trade application example here for the day. And for that, I'm just going to pull up chart 4A. And I'm going to take a look at ICE. Actually, you know what? My drawn items aren't really showing up on this chart very well. Let me come over here to chart 3A. They might show up a little bit better there since I think that's where I drew them initially. Yeah, there we go. That's a little better. So this is Intercontinental Exchange. So this is ticker symbol ICE. I mentioned this one briefly in relation to our conversation earlier today in my Q&A class about Chicago Merc. But anyway, this particular stock kind of caught my attention. First of all, it already reported its earnings. Remember, we're about to embark upon earnings season here in a big way in the coming 3 or 4 weeks. And so it's kind of hard to trade options through earnings announcements because you might have a perfectly good technical setup, but the earnings could come and throw a wrench into your best laid plans. So, ideally you wouldn't have to trade through an earnings announcement. It's just that at certain times during the year, it can be awfully difficult to facilitate that. So this is a situation where I think ICE kind of caught my attention a little bit more than it would have normally because they are one of the rare companies that's kind of off cycle when it comes to their earnings reporting. They just reported their earnings here a couple of days ago, which means we've got 3 months now before they're going to report again. And so as you can see here, this particular stock has really been in a sideways trend for the last 3 months. In fact, it's almost as flat as you can possibly get. You'll notice the label up at the top of the chart here in the 3-month category says that this stock is up 0.26%. In other words, flat as a board. Yeah, you've got a little, give and go here in kind of a sideways channel where there's a little bit more volatility, where I would say that kind of 110 is a nice floor in this sideways pattern, and then you kind of got like maybe 115 or so as the top there in that sideways pattern. So when we have a chart that looks like this, my first thought is neutral chart patterns suggest that neutral trades could very well be interesting to investigate. And so when we think of neutral trades, oftentimes we think of iron condors. For those of you that are newer to options trading, an iron condor is basically combining 2 different credit spreads. You have a bull put spread on the bottom side, and you have a bear call spread on the top side. And what you're doing is you're creating 2 different credits, one on the top, one on the bottom, and your goal for the trade is for it to stay in a sideways move. Now, these lines that you see marked up here represent where my break-even prices are for that particular iron condor that I put on. As always, I put the trade on during the session here today, and I sent out all the screenshots and the trade details on our Telegram app to those of you that are premium members, so that way you guys can anticipate what it is that I'm going to be talking about in the video, and also consider taking the trade on your own before everybody else that's watching the free video would be able to kind of look at it and evaluate it. So anyway, that information is there if you need it, but these, I believe, if my memory serves me correctly, were the May contracts. And so they're not the April ones. I think I was looking at the 110 strike as my sold put, and I believe it was the 105 as my bought put. So that is by itself a bullish trade, where you basically are saying you want the stock to stay above 110. On the upper side of my iron condor, I believe I sold the 120 strike and bought the 125. So ideally, I would want the stock to stay below 120. Now, because I'm receiving a credit along the way, and in this case, I think I received $1.55 in credit, that allows me to kind of push those break-even boundaries a little bit further than where my strikes suggest. So in other words, 120 strike that I sold plus the $1.55 in credit would push my break-even up to 121.55, and then $110 minus 155 would bring my break-even to 108.45 down here. And you can see that 108.45 would be below this company's lowest price that it has produced in the last 3 months, and my highest price up here at 121.55 is higher than the highest price that it printed. So if this company continues to trade within the exact same range that it has in the last 3 months in the coming month or so until the May expiration time period, then I should make money on this trade. If the stock, on the other hand, goes up well past this blue line or breaks down below this blue line before the May expiration, then I might end up having some losses that I need to contend with. In this case, I'm giving myself a little bit more room on the upside. That was not necessarily by design. This company has $5 increments on its options chain, so it was kind of what I was stuck with, but I actually don't mind that because this one does have a little bit of an upward tilt right now, and as I mentioned before, April is generally a more seasonally strong time period. So I kind of like having a little bit of extra wiggle room on the top side there. Notice that 121.55 is a couple of bucks above the prior high, whereas my low is really only 50 cents below that prior low. So I'm giving myself maybe a little bit of extra needed room on the top side there, just in case this thing breaks out a little bit to the upside. So that's what I had for you there. Hope you had some enjoyment out of watching the analysis or learned a few things or two along the way. Remember that what I mentioned before, David is not in town, and so there is no Market Outlook video on Friday or Monday, but I will be back with you on Tuesday again. So I want to wish you a great weekend. Enjoy yourself. Hopefully you're out there enjoying the spring weather. I want to wish you all the best of success on your trades and your investments, and if you got value out of the video, I'd appreciate you clicking like for me there on Twitter. So until next time, best of success. Take care. Bye-bye.